Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 21st of January. All right, now a little bit slow getting the data out there. I was just trying to work out what it was. Now, let's just have a look what's going on. So another positive day there for US equities. Okay, sort of setting up for a bit of a risk-on day. Expect the Aussie, Kiwi to rally, and the CAD, so that's dollar CAD lower. That's the sort of general premise. Now, it hasn't been that super clear across the board. The dollar with a risk-on situation should come off. And if I just show you the currency pairs here, that didn't really happen. Now, if you're just looking at the majors relative strength here, this gets reset at 5 p.m. New York. So you're not going to see the overall moves from the previous day on that, right? So and one just thing before I go over to the charts is Bank of Canada left rates unchanged at 0.25%. Now, there was obviously very big thinking that they were going to do some sort of micro rate cut like 0.15 or 0.2, right? And because they didn't, they left rates unchanged. It was positive for CAD, and the dollar sort of dropped very aggressively against dollar CAD. But let me just come back first of all, just like looking at the risk on, risk off profile. And this isn't like just in cement, right? If you see the equity markets moving, you got to look for the moves in the currencies. Now, just during the Biden inauguration, the dollar index actually sort of went up. Dollar Swiss was moving higher. Dollar yen started moving down. And then after the Bank of Canada, dollar CAD got thumped, or baby sealed, as I generally call it. Euro, well, it was sort of drifting up, but then just went down. Sterling popped to the top side, then sort of drifted off. Aussie and Kiwi just started dribbling to the top side. Now, it's pretty hard to sort of see what's going on. As I said, with the normal risk-on profile, you'd expect the Aussie and Kiwi to rally and dollar CAD to fall. You know, the commodity currencies with the now that sort of worked obviously in hindsight very nicely for dollar CAD because of what the Bank of Canada did. And I didn't really sort of factor any major move with no rate change on the CAD. It just so happened there was a micro cut was factored into the market. I didn't realize it was so much factored in. Anyway, so that's where dollar CAD really flushed in. And we only had dribble moves across the board there on the Aussie and Kiwi. Now, the other pairs, well, I had this question a few times. What do Euro and Sterling do on a risk-on, risk-off day? Well, generally speaking, they're quoted the same way against the dollar as the Aussie Kiwi, so they should sort of behave the same way. But they are sort of left out of that risk-on, risk-off profile. So overall, what did it do for us? Well, you know what? It's a little bit tricky, right? Because it wasn't as clear cut. We do have a situation here where the dollar index is sort of just drifting through here, lost momentum basically, and drifted through support, really weak short-term support. But if I just give you a look at the what you should be looking for now, okay, as we come into the start of the Asian session, right? You're looking for some uniformity across the majors here, okay? With the dollar pairs going up, the dollar block going down would be quite nice. As I said, it's early doors. The moves are only just starting to be counted. If you do have Metastock and you've got the live feeds, keep an eye on the E-minis, right? These equity markets, right? So the futures markets give us a bit of an inkling of what's been going on after the US market shuts, where the next sort of direction is going to come from. So that's where you can watch for a bit more, say, risk on, risk off. Still, to me, the major market to be watching is the North American session, particularly at the start. Get that US equity market opening up. Give it half an hour at least to see what the equities are doing. Of course, we had Biden's inauguration. There's a few other things. He's going to start making a lot of announcements. I'd say a stimulus package to be released very quickly. And then we can start to work out where that impact is, whether it's going to be on the bonds, equity markets, or wherever, right? So you'd expect with this level of blue, a positive day on US equities. Okay, that's going to translate into a positive day on the Asian equities and European equities, I was going to say. And you know what? We're still waiting for the currencies in particular to really kick into gear. What we ideally need is we need the dollar. We need the dollar to give us some sort of clear direction. At the moment, it's just trading sideways. Recognize that. If you do see some odd moves across the pairs, well, then look for those opportunities. But at the moment, it's we're still waiting for that traction to really come into play. And if you're wondering, like just looking at the news here, you can catch up on what was going on and what were the answers to why some of these things moved. I'd tell you the other good thing about just the Bank of Canada, just to finish, it's good to see a central bank announcement, even though they didn't do anything, impacting the market, right? That tells us we're getting closer back to the fundamentals kicking into gear. And when you look at the market today, just keep a close eye here on the Australian employment numbers. If you're in that Australasian session, it'd be very interesting. This is a bit of another raw nerve, right? For most central banks, it'd be interesting to see what the numbers are. And if there's significant variance, whether that comes into play and impacts the Aussie dollar, right? We're looking for that connection to come back into play. And that's the next step for us to start sort of kicking away. All right, guys, that's it from me. We'll have some updates on some new things coming out shortly. But in the meantime, all the very best. Cheerio.